Hey everyone, it is Ian, and today we're going to be going over just a basic outlook of what we're seeing in earnings this week. We have a lot of names on the docket. It is officially earnings season, and we're going to be going over a name that is reporting tomorrow morning before market open that the optics look really nice on. So without further ado, let's get right into it. First, let's go over the name that we're looking at, and then we'll go over the outlook for the rest of the earnings for this given week and what to expect going into the future and how we can look at things. But like I said, let's first go over Halliburton. Okay, that is the name that we are going to be looking at. On the scan today for today's earnings, you're going to see that all we have adjusted here is the implied move versus the average move because we want to see what is looking, quote unquote, most expensive relative to what it usually realizes. So, with that being said, there is Verizon, which is obviously the highest. But if you look at Verizon, this might actually be warranted considering that Verizon has been getting pummeled in recent earnings quarters, implying a move of only 3.84%, while it's been averaging a realized move over the past three quarters of around 5.5%. Doesn't appear to be great. Obviously, it could come back down. This might be a good trade if you think there's something there. However, communications have been dicey to say the least. Then there is DHR, kind of the same thing as Verizon. We've seen some really massive moves in the past couple of quarters on DHR. So again, you might want to tread carefully there. Now there's Halliburton, which is boring. Okay, that's the word that I'm going to use this as. It is boring. It's not a very pretty or like attractive type trade. This isn't like a huge P&L trade like like a Netflix could be like 2 quarters ago. This isn't that, but that's a good thing considering that historically this P&L has been negative on Strauss the past 13 quarters. Besides one break even where we got like a 2% loss. Besides that, selling Strauss was consistently making money around 20-25% in the P&L category. So, with that being said, that obviously sounds extremely optimal. Coupled with the fact that we have an implied move versus average move of 1.57, this could indicate that the premium once again exists on HAL going into this quarter. Lastly, looking at the implied move here, we can see that this has actually tanked recently. And I think a large part of this is due to markets, being less and less afraid of recessionary fears. More and more people are becoming risk on, it appears to be. So this could be one of the main catalysts for that. You're going to notice that the implied move versus the average implied move is a little bit lower. We're on the back half of this curve, on the bell curve here, for what this usually implies. But again, if we look at the implied versus realized, we're in great shape, most likely. So that is always a great sign to see. So with that being said, we have to kind of ask ourselves, why is this here? Well, guys, Halliburton essentially is a company that basically builds equipment that goes out and is used. They're more like a services type company, not like a typical upstream company. So they're a little bit different in that regard. So they're, in my opinion at least, a little bit less exposed to the day-to-day volatility in commodity prices that, say, an ExxonMobil or Hess might be. So with that being said, this could be a reason as to why this is here. Besides that, guys, just going over, just validating this and making sure that everything looks good. Just running a quick IV30 versus not of an IV30. We can see here that the premium is actually pretty much in line with, historical averages, which is always great to see. So everything checks out. Boxes are checked. It definitely looks like something that appears to be optimal. Now, the last thing to do is just make sure that we have our trade structured accordingly. So, pretty clear cut, guys. It's the same deal. Your probably best bet is going to be maximizing that exposure to the event. So that's going to mean selling weekly options this week. That way, you're getting the most exposure that you can to the event. You're going to see here that we have our break evens put up here on the intrinsic. So this is if you held this all the way through Friday. These right here are the break evens for our forecast tomorrow. And then lastly, we have the average moves right here. And this is where the stock is currently trading at. So this would be like the 41 strike, closest at the money. You're going to see that this is only going to yield around 20%, or $20, if we get that realized. And like I said, guys, this is not a very crazy trade. Okay, it's very, very simple, very, I almost want to say the word academic, right? It's very, very, very generic. So with that being said, guys, that is what we have on Halliburton. Nothing crazy, like I said. Now, looking at earnings for the rest of the week, you're going to see that we actually have some really big names coming on the docket, right? So if we just get our weekly earnings coming in here, you're going to see that we have some names that are going to be some monsters, right? And this typically can dictate what we're going to see for the rest of the given quarter. Names such as Comcast are reporting the kind of the same thing as Verizon. Com's going to have a little bit of risk. But next we have Microsoft, which is reporting on tomorrow, actually on Tuesday after the close. That's a big name to keep an eye on. We have Valero, we have Tesla, we have MasterCard, we have Southwest, we have some big, big names all the way down the line to things like Visa and Boeing and Johnson and Johnson and 3M, Blackstone, American Airlines, AT&T. It is a big, 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 big week in markets for earnings. And it covers a lot of different sectors, such as, infotech, communications, energy, consumer staples, et cetera, et cetera, et cetera. And with that being said, what this really can kind of show is, if there's going to be any surprises, right? And let's say the infotech space, right? Microsoft has probably experienced them, right? So that's kind of going to be reflective going, and it might be priced into further options on other stocks going into the future. That's why I was like looking at these early earnings to see how things are going to shake out for the rest of the quarter. What are the narratives going to be, so to speak? So I always like to keep my pulse on that. I'm going to have a link, by the way, for a full calendar with every single name on there that you guys can take a look at in the email. So be sure to take a look at that. But yeah, guys, like I said, like it's for me at least, it's always something that I like to do. It's always something that I like to look at with regards to just, analyzing, what, the market is kind of underweighting, overweighting, what they missed initially. Did they essentially price it in? So, for example, if AT&T came out and said that they've seen a huge decline in subscribers, is that going to be, a surprise if it happened? If it does happen, then, will that be priced in on other names? Like obviously Verizon reports today, but will it be priced in on further names down the road in that space? If we see American Airlines and Southwest talk about, decline, let's say they talked about declining, passenger fares, declining booking rates, et cetera, then, is that going to be further baked in? Will that change the implied move on names such as Spirit Airlines or Frontier, etc.? So that's the way I like to look at this kind of thing. I've always found that just to be a little bit helpful to get a little bit of pulse so we can kind of understand, whose lunch you're eating and vice versa when you take trades in the future. So, guys, pretty straightforward today. Let's start the week off right, and that is all I have for this one. So, thanks. Take care.